Well, borrowers are breathing a sigh of relief this morning after the Reserve Bank decided to leave interest rates on hold at 4.35%. The board says that inflation is still too high and that higher fuel prices are passing through to the prices of other goods and services. But after 3 consecutive rate hikes this year, the pause is being welcomed by homeowners. Joining us now is HSBC Chief Economist Paul Bloxham. Welcome to you, Paul. OK, so the RBA boss, Michelle Bullock, was very clear that she wouldn't rule out more rate hikes. What do you think will happen for the rest of the year?
Well, we think the economy is already in enough of a downturn that the RBA is unlikely to decide to lift interest rates any further. The governor's right to point out that inflation, of course, is still too high, and that's the primary concern, and they could lift rates if they needed to, but we're already seeing pretty clear signs that the economy is weakening. We've seen employment start to fall, the unemployment rate rising, we've seen consumption start to ease as well, and of course the housing market, which is cooling quite quickly. Auction clearance rates have come down and house prices are falling. So those are the normal signs that would get the RBA to start lowering interest rates. But of course, we don't think that's going to happen. They can't do that. Inflation's too high. So they're going to keep putting some pressure on the economy, we think, by just sitting still with their current setting.
Okay, maybe hold for a while. I mean, that's
right.
Certainly what she was saying yesterday, isn't it? That
that's right.
Sitting back and looking. Very interesting to read your comments about this latest budget is more of a redistribution of wealth rather than growing the economy. So what should the government be doing to grow our economy?
Well, we think that they should be aiming at all sorts of policy measures that help to lift productivity. That's the challenge we've got in Australia right now. That's why inflation is as high as it is, even though growth isn't particularly strong. It's because we've hit our limits at a pretty low speed limit for the economy. We need to work on making the economy more efficient. So what sort of things would we be looking for? Things like cutting through the regulatory environment and streamlining those sorts of areas, increasing more competition in the economy. That helps to drive productivity as well. And changes to the tax system that make it more efficient, not necessarily make it redistribute, but make it actually more efficient and encourage more participation in the labour market, more investment by firms. These are all the sorts of measures that we really think ought to be the primary focus. And if, for example, you want more to get housing prices to ease and affordability to improve, the aim ought to be to increase housing supply. We need to find a way to boost housing supply rather than sort of readjusting the system so it sort of distributes between one group and another.
So this budget, is it good or bad?
Well, I think that it's a mix. I mean, I think there's a whole range of things in there that are positive in the sense, I mean, looking at the intergenerational equity challenge, looking at the redistribution story is an important feature. But I think the main thing it ought to have focused on, more so than it did, is in lifting productivity, in finding ways to actually make the pie bigger rather than redistributing that pie. That's what the aim ought to have been.
Interesting to hear Michelle Bullock ask that exact question yesterday about productivity, and that was one she really lent into that question, saying absolutely that is what we are looking at, you know, when we're looking at the entire economy. All right, Paul, thank you so much. Really appreciate your insights. Here's Chevo.